Now, my next guest is wondering, though, if we're seeing the beginning of a Fed mutiny. I want to bring in Bianco Research President Jim Bianco. You know, Jim, I think a cynic would say, okay, maybe a couple of folks on the FOMC are auditioning for the next Fed chair job. But of course, it's not just them. You know, we heard some positive comments, too, from some other people out there this morning. How do you assess it?
Well, you're right. There's two Trump appointees in Chris Waller and Vice Chairman Michelle Bowman, who have come out very dovish and have talked about the idea of, you know, the Fed cutting in July. And their history has not been that they were talking about this kind of thing until very recently. We also know President Trump has been very critical of the Fed chairman. And what we do know is Powell is not going to get reappointed. And it does look like they're kind of auditioning for the job. And July, all of a sudden, is now in play. I mean, Friday morning, it was an 8% chance that they were going to cut rates in July. And now there's a 25% chance, all because these two Fed governors are pushing for the possibility of a cut.
How do you explain, though, last week, the latest Powell pivot, a different kind of pivot? Because every time he'd say, we're data dependent. We just heard Joe Lavorgna talk about the fact that the last three inflationary reads, the big ones, all have come down. Hard data keeps coming in better than expected. And yet they painted a really harsh stagflation scenario. And I'm wondering, listen, I always thought maybe the Fed should be more offensive in terms of being able to make a decision, not being data dependent, because that means they're always late. But they're making, in my mind, a big gamble here, thinking that inflation is going to really spike from here.
Well, they are making a gamble, but there is some justification for it. And that is that there's an expectation that goods prices are going to be heading higher, because there's a lot of real-time data that suggests that that's exactly what's happened. Things like Trueflation and price stats are showing that prices are going higher because of tariffs. We've also got oil prices up, or gasoline prices, excuse me, up 12 of the last 13 days. And we're dropping very low numbers in positive seasonality. What I'm trying to say is inflation rate might be headed towards 3% by the fall. Now, it's not 8-10 or Zimbabwe inflation. It's going to go from 2.5 to 3. But that's not the type of environment that the Fed should be cutting rates. Also, with the stock market rebounding and the economy doing okay, it suggests that, at least at this point, 4% interest rates are not a problem for this economy.
Right.
I know President Trump screams and yells he wants them to cut rates, almost as if there's a problem that 4% is holding something back. But it really doesn't look like it is. The economy's so good right now that 4% seems to be almost normal.
You know, and to that point, I want to get your reaction on today's, the way the markets handled the events over the weekend. Obviously, social media went crazy. It was doomsday. It was doom and gloom. This is it. This is the big one. And we snapped back, not just once, but twice, right? We snapped back at the open, and then we snapped back after the salvos from Iran, where, by the way, I'm reading reports that they even notified us that they were making these attacks. So sort of half-hearted, maybe more for consumption of their citizens.
That's exactly right. I mean, Iran found a rare way to launch missiles at the U.S. and make it worse for them without the U.S. even responding. Because what happened was the Qataris shot them down. They told us the missiles were coming. There was no damage. No one was hurt, thankfully. And the market took this to be Iran has no capability of responding. They can't shut the Strait of Hormuz. That odds, the chart you showed a minute ago, are way lower now in the last hour than they were. Oil prices are collapsing and the stock market is going up because the reality is that Iran doesn't have the capability to do much of anything right now that could hurt energy infrastructure, to keep it narrow at that point. And if they can't, then that risk premium in oil is going to start to come down, and it is. So
a de facto surrender of sorts. Hey, I got a little less than a minute to go. You and I always talk about markets and society at large. And here in New York, there's a big election. And according to the betting odds, a socialist may actually win. For the powers that be, if that were to happen, what would be the message? I mean, I feel like sometimes the folks on Wall Street and the ivory towers are just so disconnected from the masses that they don't realize that the pendulum of angst could swing from one direction all the way to another extreme.
Exactly. Now, to be clear, it's a primary election for the Democrat. The general election is in November. So you could see a socialist in Madami potentially win. The betting market, some of the polls that have come out have shown that it's going to be a very close race tomorrow as to who's going to win. If he does win, he probably won't be the favorite to win in the general election, but it will be a strong message that the progressive liberal argument still has a leg, still has people that are considering it in the Trump era, and that is something to not be dismissed when it comes to trying to figure out where the politics are in this country. There's still an audience for that, especially in large urban areas like New York City.
New York City, the heart of Wall Street. Jim, thanks a lot, my friend. Appreciate it.
Thank you.
All right, so this whole big rally really that began